What's up guys, it's Chris here. Now in the last year, especially the last 3 months, we have seen some crazy good share price growth and also some bad ones as well. But in today's video, we're going to be taking a look at the best and the worst performing shares of the year, exactly how much each of them made, and whether they will still be a good investment to make in this coming year in 2024. And at the end of the video, I'm also going to be showing you a full table of some of the best shares in South Africa. And if you invested 1,000 Rand in January last year, how much you would be sitting on just 1 year later. So let's get started. I guess we start off by saying Happy New Year. 2023 was incredible and our casual cash community grew by over 10,000 people in just the last 12 months, which is actually crazy. And I'm really glad you guys find value in how to be a better investor and grow your wealth with the videos. I appreciate you and I'm excited to grow our portfolios together this year. We celebrated 2023 by taking a trip to St. Francis Bay, which is a beautiful coastal town in the Eastern Cape, where we hiked along the beach and kayaked through the canals, then driving out to the Tsitsikamma National Park along the garden route and explored the big 1,000-year-old tree and the Rivermouth Suspension Bridge where the freshwater river meets the ocean. If I had planned a bit better, I could have kayaked here too, but maybe next time. Like I've said before, the two things I enjoy is to build investment portfolios and explore the world, and hopefully I get to do a lot more of that this year. But speaking of growing investment portfolios, let's get straight into the best performing shares for 2023. Now you might know that I made a similar video last year with the best growing shares of 2022, but honestly most of them were throwaway shares that weren't actually good to invest in. And that's because out of the whole JSE, the shares that grew the most were most often companies that had tanked and lost 80 to over 90% of their share price, and from a very low base of say 1 Rand a share, had grown to 4 Rand a share and shown 300% growth. But despite that, were still terrible shares to invest in. So, in order to make this year's video actually helpful to investors and give real examples of blue chip companies you could invest in, we are going to go through the 40 largest companies in South Africa and seeing which of them performed the absolute best and the absolute worst. But before we get there, let's chat about the sponsor for today's video. So if you've watched this channel, then you know I like to diversify, and that means having to keep up to date with all the different markets that I'm invested in. And the problem with that is the huge amount of time it takes to monitor the news and market movements and adjust my trading strategy to fit them in real time. And that's why XM, one of the country's largest brokers, just released a platform called copy trading. Because with copy trading, it allows new traders or people without a lot of time on their hands to benefit from the expertise of more experienced traders. It means that you don't have to spend hours or days analyzing the markets, having to learn how to read charts or analysis, or starting from scratch to develop a trading strategy. You can simply log on to their easy to use platform and search through thousands of experienced traders. Then when you find one or more with the type of results you want to copy, you can simply click copy. And that's all the time it takes. Now while you are sitting on the beach, the copy trades are executed automatically into your account and you can gain from the markets just like the pros do, all while being able to follow their trades and results in near real time. Now, of course, as with all things financial, trading can involve risk and result in the loss of your invested capital. So remember that T's and C's will apply. That said, XM are fully licensed with over 10 million clients in 190 countries globally, so there is some confidence for you. All you have to do is click the link below to try copy trading today. Okay, so to start with, here are the 40 largest companies in South Africa on the 1st of January, and we get this information from the composition of the Satrix 40 ETF, whose job it is to track them. And of course, these are many of the companies and names that you will know, like Anglo American, Naspers, Capitec, MTN, Shoprite, and a whole host of others. Looking through these, it's probably likely that you own a few of them. So let's start with the top 10 worst performers. Now technically Naspers lost 99.98% of its share price, but that's because of a corporate restructuring with its other company Process, and it didn't actually lose that much value, it just shuffled it around. So we're going to ignore that. But these are the top losers of 2023 from South Africa's biggest companies. You can see we've got Vodacom, Absa, British American Tobacco, Growthpoint, Northam Platinum, Anglo American, Sasol, Anglo Platinum, Sibanye-Stillwater, and the worst performer this year with a 57% loss of share value was Implats. Now you will notice that the top 6 of the 10 here are basic materials companies and mostly mining and platinum. I often get asked in the comments why I don't have mining shares, and it's because I find them too volatile for the long term. Specifically this year, platinum and oil prices declined and it affected these 6 shares in a big way. I also made a video about my concerns with Thungela a while ago and it dropped by 42% this year. But with that being said, the top 2 highest growing shares this year were also mining shares, which we'll take a look at later, meaning you could also be missing out on the other side of huge growth. So perhaps if you know the commodities markets and keep in the loop, maybe this could be a good entry point for platinum as its price is forecasted to grow in the longer term, but I'll leave that up to you. I personally prefer more steady industries, but hey, I could be missing out as well. So now let's head on over to the other side and get stuck into the very best performing of South Africa's largest companies and see whether they could still be a great investment for our 2024 portfolios. And I actually own shares in 2 out of the top 10. Now again, technically the highest share growth was, how do I say this? Compagnie Financière Richemont, was that right? But again, they had a new capital restructuring this year, so we have to ignore that one. But apart from that, here are the top 10 highest growing shares in South Africa, and as you can see, we've got 3 basic materials, 4 financials, and 1 industrial, consumer staples, and healthcare. And the companies are BHP Group, Old Mutual, Standard Bank, Mondi, Bidvest Corp, Raynet Investments, Sanlam, Aspen, Goldfields, and Harmony Gold Trading. Now, in case you are wondering, the 2 companies out of the top 10 that I own shares in are Standard Bank at number 8 and Sanlam at number 4. Standard Bank has just been an absolute stellar performer this year, and you may remember that I started dollar cost averaging into Standard Bank when the interest rate started rising, because banks can earn higher returns on loans with higher interest rates. But honestly, where I made my biggest gain, and the reason it went so high this year, was when banks around the world started feeling pressure because rates went too high and certain overseas banks closed down. Banking share prices went down and I continued to dollar cost average, which means to buy a similar amount of shares regularly over time rather than a big lump sum amount in some solid retail banking shares with good balance sheets like Standard Bank. And along with great management, as news of interest rates slowing and potentially coming down surfaced, the share price did really well and they also paid over 7% in dividends over the year, so a great performer, and my shares are currently up 27% or 34% total return with dividends. Then Sanlam was a great success story because we bought at a great time. So after the riots last year, Sanlam had large once-off expenses that affected their reported profits, because as an insurance company they had to cover those claims from damage to property and stolen goods. But when the share price dropped, it didn't make sense to me because again, these were once-off expenses and once they were paid, their profitability would return. So I bought shares when they were down and their profits recovered as you would expect. So in the last year, they are now the 4th best performing shares out of South Africa's biggest companies, not to mention they paid over 5% in dividends as well. Now guys, if you want to see all of my share buys and sells like these 2 live and in real time on the day I make them, along with the reasons why I am buying and why I think they will do well, then you're welcome to join into the Casual Cash Club on Patreon, along with many other perks like portfolio updates, market news, and investing tips and tricks. I post all of my buys and sells here as I make them. Now, not all of them are top 10 best performers like these 2, but you can follow my investments and decide for yourself. Best of all, there is a 7-day free trial, so you can get access for free without any cost to see if you find value. And if you do, it's only $3 a month, which is the lowest possible that Patreon recommends. Otherwise, just enjoy the free 7 days. Now for the top 5. We've already spoken about number 4, Sanlam, with a 43% gain. Raynet Investments comes at number 5 with a 42% price rise. And if you don't know, Raynet is a spin-off of Compagnie Financière Richemont that we spoke about earlier in The Biggest Losers. They created Raynet Investments to hold their non-luxury assets like their stake in British American Tobacco, bonds, real estate, and derivatives. Basically the more boring stuff. But as you can see, sometimes steady wins the race, and their stellar performance this year seems to be a trend, with their 5-year profit showing 115% and a steady growth pattern since it listed. This is one of the shares that appears to have solid investment assets and so far good long-term growth, so this could be a good option for a long-term portfolio. Number 3 is Aspen Pharmaceuticals. Now, I bought 17 shares of Aspen in 2012 and sold it, but the company has had ups and downs over the years, specifically some downs since 2015, but as you might expect, since 2020 and the COVID pandemic, the demand for essential medicine surged, and pharma companies like Aspen have benefited greatly since then. What is also quite interesting is that the rand has weakened to international currencies over the years, which means their profits on exports have gone up, because $1 now means more in rands if you are exporting. It's fascinating actually. And lastly, they seem to have made some strategic company acquisitions in countries like Turkey, which have shown good growth. So overall, it doesn't seem like there are many factors which would slow down its growth over the long term, so maybe another good option. But again, just remember to research these companies yourself and see if you are happy with them before you invest. And the last two here, like I said earlier, are two mining companies, but with one small difference. Here we have Gold Fields with a growth of just over 50% and Harmony Gold Mining, which posted an incredible 94.46% in growth. That's nearly 100% share price growth in just 12 months, essentially doubling your money in a year. And we once again have quite a simple reason for this. And that's because unlike platinum prices which went down this year, we have gold prices that went up by about 11% this year, and which boosted the gold mining companies greatly. Now, this is not to say that there were not other factors. Of course, good corporate governance and management will still play a big part, but it is unlikely and rare that mining companies show share price growth when their main commodity goes down. Still, all those factors help for great results when their commodity goes up, like gold did this year, and that is still the main factor. Now the question is, with these companies being the best performing of the year, should you now invest in them? Well, I must go back to what I said in the beginning of the video, which is that I still find mining a risky industry, and sometimes factors outside our control or knowledge can affect the commodities market. Often when interest rates go up and the market goes down, people flock to invest in gold as a historical safe haven, and the price goes up. So this year, as interest rates potentially go down and hopefully the market starts to go up, does that mean gold will now start going back down? I honestly don't know enough about commodity markets to tell you, but I personally would be more cautious on these ones, but that's just me. And like I promised, before we finish off, here is the full list of all of the JSE top 40 shares and their performance over the last year, showing the results on if you invested 1,000 Rand exactly a year ago, so you can just pause the screen if you want and take a closer look at all the results. And guys, that is it for today's video. I hope you found the content packed with information and maybe some good options to look into further for your portfolio. If you enjoyed it, please leave a like on the video, and to see more videos helping you be a better investor, you're welcome to subscribe to the channel. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.